Hi everyone, in this video I'm going to answer the question, is Visa stock a buy? I'm going to use my simplified 6-step framework for analysis, so let's get right into it. Of course, the first step in my framework is the customer value, and Visa offers extremely convenient form of payment for consumers and merchants. Happens in an instant. You tap or slide and your payment is processed instantaneously. I think as consumers and businesses we take this for granted. It's just become so much more convenient than taking your money out, counting it, and getting it, then having to get change. It just speeds up the payment process so much. It's just incredible value there that I think we've taken for granted. Revenue has soared from 11.8 billion in 2013 to 29 billion in 2022. So more and more adoption from customers and businesses equally. And looking at its net promoter score of 12, and then we look at the scale, it's got a score, it's got a good score, not great. So in that regard, in the scale, it's good. Moving on to my next step, looks at unit economics, and Visa's initial investments in developing, scaling, and onboarding merchants and consumers are paying off handsomely. Its operating profit margin expanded from 61.5% in 2013 to 67% in 2022. An operating profit margin of 67% is incredible. Excellent, excellent unit economics for Visa. The total addressable market is the next step in my framework, and just in the US alone, transaction value on credit cards was estimated to be 4.3 trillion in 2021. The figure surpasses tens of trillions worldwide, so an absolutely massive addressable market opportunity for Visa. The next step in my framework looks at competition, and Visa operates in a sort of oligopoly alongside MasterCard. The two major players are MasterCard and Visa. There are some smaller players that are relevant, but the most powerful are MasterCard and Visa, and they don't compete against each other based on price. It's not like Visa and MasterCard try to undercut each other, offering merchants a lower. The way Visa and MasterCard, of course, make revenue is by taking a percentage of each transaction value plus a small fee. So it might be something like 3% of sales plus a 30 cent fee. And they don't compete with each other in lowering that fee and trying to sign on merchants, right? They don't try to undercut each other. And this is good. This is good news for investors. They try instead to lock in exclusive agreements with merchants, and overall, this has led to excellent profit margins for both Visa and MasterCard. Looking at valuation, the stock is fairly valued. A price to earnings ratio of 30 and a price to free cash flow of 25. If we look back all the way to 2018, it's about its average valuation going back that time. And just on absolute terms, of price to earnings of 30 and a price to free cash flow of 25 is, I would say, fairly valued. It's not cheap and it's not expensive. It's about in the middle there, fairly valued, I would say. The final step in my framework looks at risks, and the biggest risk long term is disruption from fintech companies that could unsettle this existing market dominance of Mastercard and Visa. So that's a massive long-term risk, something that could come in and disrupt that. There isn't anything imminent right now that's threatening them, but longer term there are several fintech providers that are trying. They're trying to innovate here, and one of them may be successful, and so that's a risk for Visa and Mastercard. And some near-term risk, headwind from a recession. Of course, I mentioned that they get a percentage of revenue, percentage of sales as their revenue, and if consumer spending falls, their percentage of those sales will also fall. So that's also a risk here. But overall, I would say mild risks that they're facing, Visa and MasterCard for that matter. So now that I've looked at each step in my framework, gave you some highlights, let's give Visa a grade in each step. Customer value, I gave them an A minus, extremely convenient payment methods. Unit economics, A plus, maybe best in class operating profit margins, best in maybe it's the top three in any of the businesses that I cover in terms of operating profit margin. Excellent margins there. Total addressable market in the trillions, A plus there. Competition, they get an A. Visa and MasterCard, they're not really competing on price. That's good for investors. Risks, I gave them an A because there isn't anything imminent right now that's threatening their dominance. And valuation, I gave them a B because the stock isn't cheap and it's not expensive, so they get a B in that regard. Okay, so now that I've graded Visa, then in the next slide, I'll answer the question if Visa stock is a buy right now. But before I do that, I'd like to recommend that you subscribe to my channel because I am going to be providing updates to this recommendation. And if it changes, you're going to want to be subscribed to get that notification for the update. So go ahead and subscribe to my channel right now while I switch over to that slide to answer the question if Visa stock is a buy right now. Visa stock is a buy right now. Excellent operating profit margins and a dominant player in the industry with a massive total addressable market sways me to say that Visa stock is a buy right now. Okay, so that's all I've got for this video. If you subscribe to my channel, I'll see you next time for the update on if Visa stock is a buy right now. Thank you for watching. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/parkev to get your 10 stock picks now.